With the stock market thriving and prices rising, you might wonder how to navigate investing when things seem a bit pricey. This video will look into some budget-friendly stocks that can greatly add to your portfolio. These aren't just your typical low-cost stocks. We're talking about quality choices that can offer solid returns over the long run. At number 5 on the list is Moderna stock. Starting from a research paper by Hungarian biochemists, Moderna was born as a biotechnology and pharmaceutical firm in Cambridge, specializing in RNA-based treatments with a strong emphasis on mRNA vaccines. 5 years ago, the price of this stock was $14.81 per share, which has now increased to $58.29 per share. Since its inception in 2010, Moderna has experienced fantastic growth and has become a significant player in the biotech field, largely thanks to its intelligent strategies. Imagine a new restaurant that quietly perfects its recipes for 2 years without letting anyone in the neighborhood know. That's similar to what Moderna did during its early days. They focused on research and testing, utilizing non-human primates to explore the potential of mRNA treatments, all while staying under the radar to keep competitors guessing about their innovations. By 2012, just 2 years after launch, Moderna hit the jackpot by reaching unicorn status, a milestone for startups valued at over $1 billion, after securing $40 million from investors like Flagship. In 2013, their fortunes grew even more with a partnership with AstraZeneca, which handed over $240 million upfront for their research into specific medicines. Also, in 2013, the Defense Advanced Research Projects Agency, DARPA, awarded Moderna approximately $25 million to help develop mRNA treatments to combat infectious diseases. With this newfound support, Moderna expanded its headquarters in Cambridge, Massachusetts, and even opened a new lab to boost research efforts further. The company also gained significant attention in the scientific community by publishing essential findings in Nature Biotechnology. In 2014, they struck a deal with Alexion, another big player in biopharma, to develop treatments for rare diseases. Alexion coughed up $100 million up front and topped it off with an additional $25 million investment. This partnership allowed them to explore new drug candidates while Moderna earned success-driven payments. Moderna didn't stop progressing there. They also teamed up with Karolinska Institute in Sweden to broaden their research horizons while supporting local scientists. By 2015, just 5 years after its start, Moderna had made such an impact that it topped the CNBC Disruptor 50 list for its innovative advancements in the pharmaceutical industry using mRNA. When the pandemic hit in 2020, it was tough for many people, but Moderna stepped up by creating vaccines. They made a vast profit, raking in $19.2 billion in 2022. However, as the demand for COVID-19 vaccines started to drop, their revenue dipped to $6.8 billion in 2023. Looking at future projections, the company expects to make between $2.5 billion and $3.5 billion in sales by 2025, and they're also aiming to get 10 new products approved by 2027. Analysts are feeling positive about the future and think Moderna's stock could increase in value. This might be a good, affordable option to consider adding to your portfolio. You never know when the next pandemic might hit, which requires a vaccine. Who knows? Maybe even a zombie apocalypse. It could be smart to consider investing in Moderna now while you can. Another cheap stock is Kohl's KSS. Kohl's Corporation functions as a multi-channel retailer within the United States. It sells various products, including clothing, shoes, accessories, beauty items, and home goods, in physical locations and online. The company primarily markets its merchandise under well-known brand names such as Croft & Barrow, Tech Gear, Food Network, LC Lauren Conrad, Nine West, Simply Vera Wang, Jumping Beans, SO, and Sonoma Goods. Kohl's Corporation, KSS, is rising, with its stock jumping by 5%. Right now, shares are trading at $19.73 each. Regarding trading activity, about $3.02 million shares have changed hands, leading to a turnover of 2.72% and an excellent price fluctuation of 4.92%. Looking at their recent financial performance, Kohl's reported an impressive revenue of $3.732 billion and a net profit of $66 million. That breaks down to an earnings per share, EPS, of 59 cents and a gross profit of $1.416 billion. Plus, their price-to-earnings (PE) ratio is a friendly 7.74. A PE ratio of 7.74 means that for every dollar Kohl's makes in profit, investors are willing to pay $7.74 for the stock. This low number can indicate that its shares are a good bargain compared to other companies. The company utilizes artificial intelligence to enhance its operations, increasing profits and more efficient processes. In fact, the second largest bank in the world by revenue, Goldman Sachs, believes that Kohl's Corporation, KSS, is an excellent long-term investment in the AI space that has the potential to grow over time. Looking at Kohl's numbers, it seems to be a bit undervalued compared to its true potential. It has a value score of A, which suggests it could be a smart choice for people investing in undervalued stocks. A growth score of A shows solid financial health and the possibility of growing even more, which means it might do well in the market in the future. Another stock is SOFI Technologies, trading at $9.01. SOFI Technologies is a company that helps people manage their money and offers financial technology services. Simply put, their lending division covers you for loans, while their technology platform offers useful apps for managing your finances. Additionally, their financial services division provides a variety of offerings, such as investment advice and insurance, equipping you with tools to manage your financial health effectively. SOFI Technologies has performed well over the past year. Still, after President Biden's recent declaration about student debt relief, you may have observed a drop of 4.3% in the company's stock value. But here's the good news. In their latest quarterly report released on July 30th this year, SOFI showed some fantastic results. They achieved a remarkable 22% jump in adjusted net revenue compared to last year, hitting a record of $597 million. Even more exciting is that revenue from their financial services and tech segments climbed by 46% over the past year, now making up 45% of their total adjusted net income from just 38% a year ago. This shift toward diversifying their offerings helps SOFI become less reliant on just lending, which is a smart move for their growth and stability in the future. On the profitability front, SOFI has been hitting some impressive milestones. They've posted 3 straight quarters of profit, with $17 million in GAAP net income for the 3 months ending in June 2024. This kind of progress not only boosts investor confidence but also shows that SOFI's business approach is not just sustainable but can scale up successfully too. Getting started with investing in SOFI Technologies or any other stock is super easy. Click the link in the description to find a platform that makes trading simple and accessible. Another cheap stock is Transocean. Transocean began its journey in 1953 and focused on offshore drilling. Right now, their stock is trading at $4.30. They have a range of rigs built to work in deep waters and harsh environments and operate in different parts of the world. A few years ago, offshore drilling wasn't as widespread because oil prices were low and better options like shale drilling existed. But now, with rising tensions in Israel and higher energy prices, offshore drilling is becoming appealing again. When you look at history, the offshore drilling market was worth about $36.60 billion USD in 2023 and is projected to reach around $80.64 billion USD by 2033. That means it's expected to grow 8.22% annually from 2024 to 2033. The main reason for this growth is the rising need for oil and natural gas worldwide. In their latest report, the company announced an impressive turnaround, changing from a significant loss of $465 million in last year's first quarter to a profit of $98 million for 2024. One of the key factors behind this profit was the increase in contract drilling revenues, which rose from $649 million last year to $763 million this time. This boost primarily came from more activity as previously inactive rigs resumed operations, higher day rates, and additional revenue. The average day rate climbed to $408,200, up from $364,100 during the same quarter last year. Despite these improvements, there were challenges. Expenses also rose, increasing from $636 million in the first quarter of 2023 to $760 million for the 3 months that ended on March 31st. Additionally, the company faced some issues with revenue efficiency, particularly with its ultra-deepwater drillship, Deepwater Titan, which encountered a problem with its blowout preventer that has since been resolved. Looking at the bigger picture, there's still a silver lining for long-term investors. Over the past 3 years, the stock has climbed by 91%, outpacing the overall market. Furthermore, in the 3 months that concluded on June 30th, 2024, contract drilling revenues increased by $98 million, reaching $861 million thanks to improved rig utilization and better overall efficiency. And on top of the list is MARTA stock. Founded in 2009, MARTA is a company that provides financial services and tech solutions for fintech businesses. Their platform uses an API, which helps clients create new credit cards and handle various transactions. The stock hit around $33 right after the company went public, but dropped to about $5 after reaching lows of around $3. The reason for this was that MARTA's biggest customer, Block, renewed their contract last year with a 40% lower revenue share, which hurt MARTA's growth. The founder, Jason Gardner, also stepped down as CEO in August 2022 and from the board in June 2024. This all contributed to the stock's decline. But with most operating costs fixed, increasing debit and credit transactions on their platform can boost their profit margins, paving the way for profitability as transaction volume grows. Adding this stock to your portfolio might be smart, as analysts predict its average price could reach $20.85 by 2030. Now's the time to snag these stocks while their prices are low. Don't let this opportunity slip by. But if you're a business owner looking for more than just stock options or seeking job opportunities, Workity.com is the perfect platform for you. You can post free classified ads to promote your business, showcase your services, connect with potential clients, expand your reach, and grow your customer base. Additionally, by creating a Workity account, you can explore job listings not only in the UK and USA, but also worldwide. You have incredible potential within you, and anything is possible. Taking a chance might feel scary, but it's much better than just hiding that cash under your mattress. Millionaires aren't born, they're made. And guess what? You have what it takes to be the next one. Like, share, and subscribe.